When you think about who impacts your money, you probably picture your bank or employer. Maybe you consider the company you work for or the local branch where you deposit your paycheck. But the reality is, there are powerful forces shaping your financial life that you might never see or interact with directly. One of the biggest players in this hidden world is BlackRock, a financial giant working quietly behind the scenes, yet influencing nearly every corner of the global economy. As the world's largest asset manager, BlackRock oversees more than $11.5 trillion in assets. To put that in perspective, that's more money than the GDP of most countries. Their reach extends across continents, industries, and millions of individual investors. This immense scale gives BlackRock enormous sway over global markets and, by extension, your investments, even if you've never heard their name before today. If you have a pension, a 401k, savings, or own an ETF, there's a good chance BlackRock manages some of your money, often through their popular iShares funds. Their influence reaches into retirement accounts, college savings plans, and even the mutual funds you might hold. When BlackRock does well, your retirement savings and investments often benefit too. Their performance can directly impact the growth of your nest egg and the security of your future plans. In many ways, BlackRock's performance is a pulse check for the entire investment world. Financial news outlets and analysts watch their every move, because what happens at BlackRock can ripple through markets everywhere. So, keeping an eye on BlackRock isn't just for Wall Street insiders, it matters for anyone planning their financial future, from young professionals to retirees. The company's results offer a snapshot of global market health and highlight emerging trends that could affect your portfolio, your job, and even the broader economy. Understanding BlackRock means understanding a big part of your own financial picture. Their strategies and decisions can influence how your investments perform and how you plan for the future. Their moves can shape entire industries, drive innovation, and influence your long-term wealth in ways you might not expect. That's why BlackRock's story is relevant to all of us, because whether you realize it or not, their decisions touch your life and your financial future. You'll hear a lot about earnings season. It's a buzzword that pops up every few months on financial news channels and in headlines. But what does it actually mean, and why does it matter to you, even if you're not glued to the stock market every day? Let's break it down. What's an earnings report anyway? Think of it as a quarterly report card for companies like BlackRock, showing how much money they made, what they spent, and what's left after all the bills are paid. It's a snapshot of their financial health and performance over the last 3 months. These reports aren't optional, they're required by law for public companies. That means everyone, from Wall Street pros to everyday investors, gets a transparent look at how a company is really doing. Investors and analysts pore over these numbers to decide whether to buy, hold, or sell shares. The data can influence billions of dollars in trades in just a few hours. If a company's results beat expectations, share prices often surge. If they disappoint, prices can tumble, sometimes dramatically. The stakes are high, and the reactions can be swift. But it's not just about the numbers. During earnings season, company leaders also share their insights, explain what's driving results, and reveal their outlook for the future. This is called guidance. Sometimes, this guidance can move the stock price even more than last quarter's results because it shapes what investors expect next. So why should you care? Because companies like BlackRock manage money for millions of people. Pensions, retirement accounts, and investments that might include your own savings. Their strategy and focus revealed in these reports can signal broader market trends and even impact the economy as a whole. Understanding earnings reports isn't just for experts. It helps you make smarter financial decisions, whether you're investing for the first time or planning for your future. As BlackRock's January 15th earnings release approaches, analysts are busy making predictions. Their consensus estimate sets the benchmark for revenue and profit. For Q4 2025, experts expect revenue around $6.8 billion, mostly from management fees. They're also watching earnings per share, predicted at $12.55. Beating these numbers is a big win. Missing them can send the stock down. These forecasts are based on data and trends, but surprises happen, good or bad. That's why earnings day is dramatic. the market reacts instantly to real results. A strong report can boost confidence and share price. A miss can trigger a sell-off. Ultimately, these predictions set the stage for how investors respond. The real test comes when BlackRock reveals its actual performance. Looking back at Q3 2025, BlackRock delivered strong results that beat expectations. Revenue topped $6.5 billion, driven by steady fees from their massive asset base. Their adjusted EPS hit $11.55, showing impressive profitability and cost control. These results boosted investor confidence and pushed the share price higher. The company's diverse products and global reach attracted more client money. This momentum set a positive tone for the upcoming quarter. Analysts are optimistic, hoping BlackRock can repeat or exceed this performance. The last report raised expectations for another strong showing. Why are experts bullish about BlackRock's next report? Their assets under management keep growing, thanks to strong markets and steady inflows, especially into iShares ETFs. These low-cost funds are attracting investors worldwide, fueling revenue growth. BlackRock is also expanding into active ETFs, private credit, and financial technology. This diversification opens new revenue streams and reduces risk. The company's strategy is paying off, and analysts see more upside ahead. Wall Street remains positive, with high price targets for 2026. BlackRock is building for the future while delivering now. Despite the optimism, BlackRock faces real risks. Market volatility can quickly shrink the value of assets they manage, cutting into fee income. Regulatory scrutiny is rising as BlackRock's size draws attention from governments worldwide. New rules could increase costs or limit business activities. Competition is fierce, with rivals like Vanguard and nimble fintechs pushing fees lower. This pressure can squeeze profits and force constant innovation. Client preferences are shifting, with more demand for sustainable and ESG investing. If BlackRock's funds underperform or miss these trends, clients may leave. Navigating regulation, competition, and changing investor demands is a constant challenge. Even giants like BlackRock must adapt to stay on top. When BlackRock's Q4 report drops, it's easy to get lost in the sea of numbers and financial jargon. But to really understand how the company is performing, focus on a few key numbers that matter most to investors and analysts. First, zero in on revenue and earnings per share, or EPS. Compare these to the Wall Street estimates, $6.8 billion for revenue and $12.55 for EPS. Beating these numbers often signals strong performance, while missing them can raise concerns. But don't just look at the headline, check if the growth is coming from core business or one-time gains. Next, examine net inflows. This tells you if more money is coming into BlackRock's funds than leaving. Positive inflows suggest clients trust BlackRock with their investments, while outflows could be a red flag. Dig deeper. Where are those inflows going? Are they concentrated in iShares ETFs, active funds, or perhaps new innovative products? This breakdown reveals which parts of BlackRock's business are thriving and which may need attention. Total assets under management, or AUM, is another crucial metric. Growth in AUM means BlackRock is attracting more client money and expanding its reach, which strengthens the business for the long term. Look at how AUM has changed compared to last year. This growth is driven not just by new inflows, but also by how the market's performed. A rising market can boost AUM, but steady inflows show real client confidence. Don't just look back, read management's outlook for the next quarter and the year ahead. Their guidance can reveal new priorities, potential risks, and where they see opportunities for growth. Pay close attention to their commentary on market trends, business strategy, and any new initiatives. These insights can influence how investors view the stock and may even move the share price. Sometimes, a confident forecast or a bold new strategy can boost shares, even if last quarter's results were just average. The market often reacts to future potential as much as past performance. These highlights help you see if BlackRock is winning new business, retaining clients, and setting up for future growth. It's about the bigger picture, not just one quarter's numbers. Ignore the noise, focus on these essentials, and you'll get a clearer sense of BlackRock's true performance. That's how you read between the lines and make smarter investment decisions. If BlackRock beats expectations, shareholders usually see the biggest rewards, share prices jump, and dividends may rise. The company might also buy back shares, making each remaining share more valuable. For long-term investors, steady dividends and buybacks make BlackRock stock attractive. Even if you don't own BlackRock directly, a strong report signals your pension or ETF manager is healthy. BlackRock's success can lift overall market confidence, boosting the value of many investments. Their performance ripples through the financial system. A good report means more than just numbers. It can improve your financial outlook. That's why these results matter to everyone. BlackRock's earnings aren't just for Wall Street, they matter to all of us. The results reveal how the world's largest asset manager is steering trillions of dollars. For investors, it's a direct impact on share value, dividends, and buybacks. For millions with pensions or savings, it's a health check on your financial future. BlackRock's report is also a key economic indicator, showing investor confidence and market trends. Strong inflows mean optimism. Outflows can signal fear. As the report comes out, look for new money, successful ventures, and management's outlook. Whether BlackRock beats or misses, the insights shape market sentiment and investment strategies. In the end, this is a story about money on a massive scale, and it touches us all.